Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes to go before the end of the trading day. Scarlet Fu here along with Katie Greifeld. We're counting you down to the closing bell, and here to help us take you beyond the bell with a global simulcast is Jess, Menton, and John Tucker. And of course, we bring together our Bloomberg Television, Bloomberg Radio, and YouTube audiences along with originals worldwide as we look at how we're wrapping up the trading day, week, and quarter. And what surprises me, Jess, is the extent to which there seems to be so much optimism. It's a broad-based advance. Yes, we got encouraging inflation data, but there are a lot of reasons to be concerned in terms of what's to come in the weeks ahead. Anything from earnings to inflation still being fairly high.
Right. We'll still have the jobs report next Friday. It's actually on Good Friday, so that's going to be a holiday, so markets aren't supposed to be open for that. But as you know, Scarlett, as well, we'll have those earnings from JP Morgan on the 14th, kicking off big bank earnings, obviously regionals being in focus. In the middle of that month, also, we'll get another CPI report. So there's still a lot on the docket coming up, John.
Yeah, and I'm taking a look at some of the stocks that were decliners today. Standing out, Virgin Orbit, VORB, all-time low there, the satellite launch provider, connected, of course, to Richard Branson. Ceasing operations, a cash crunch. They're cutting 85% of the workforce. They are going to retain some people, but those are the people who are going to wind the company down. VORB right now is down 39.5%.
And I mean, there you go. We've been talking about how big tech is rallying, but then you look at some of the profitless tech names, it's a different story.
Yeah, that's a great chart, and we'll bring that to you shortly. But for the moment, we are getting ready to close out near session highs with the Dow, S&P, and NASDAQ up by more than 1%. I was going to say 1.5%, and that's the case for the S&P, but not yet for the Dow. And for the NASDAQ 100, this will be the best quarter performance since 2020, and one of the best over the past decade, Jess.
And Scarlett, you were talking about how this broad-based rally is playing out today. If you look at the number of advancers, 440 in the S&P 500, about 87%, actually 88% now that we're at the close. And then you're looking at the decliners, just 12% or 62 stocks, Katie.
And let's take a look at the industry groups. It really paints the same pictures that this was a big, broad rally. You look at the top, you see autos leading the way up about 5.5% or so. A lot of that coming from Tesla. You're also seeing the same thing if you look at some of the media and entertainment stocks and also real estate, et cetera. The list goes on. We go down to the bottom to some of the relative underperformers. Not sure if that's a word, but you can see energy up about 0.6% and telecom also up about 0.6%. So even the losers are winning today, Jess.
Yeah, and taking a look under the hood again on the S&P 500, looking at BlackBerry. So that stock up 14%. So basically it's best since June 2021. So it did post quarterly revenue. Unfortunately, that missed estimates, but apparently it had a smaller per share earnings and adjusted loss than analysts were anticipating. So you saw that driving the stock. I have to talk about Tesla because it was all discretionary, right? Doing so well today. So you look at that stock up more than 6%. And also, this is important to note, this weekend Tesla is expected to release its delivery numbers for the first quarter. So that's going to be in focus and could most likely move the stock once it starts trading in the beginning of next week. And then I'm going to end with Align Technology. So this is the orthodontics company. It makes Invisalign, those clear aligners. So if you look at that stock up 7%, it's one of the biggest gainers among those in the NASDAQ 100 today. And it did get a couple of upgrades on potential positivity as far as that company moving forward. But those were the three top ones for today, ladies.
All right. Why do we get stuck with the losers? Another electric vehicle maker, Nikola.
You're the sole guy, that's why.
Yeah, okay. Their $100 million share offering priced at $1.12 a piece. That's like a 20% discount since the last close. The proceeds supposed to be used for working capital and some of the corporate expenses. The plan to sell 30 million shares to the public, 59 million shares to one of the investors. Right now, 15% lower in today's trading.
I love the headset look, John.
Yeah.
It's great.
The loser reporter.
Oh, God. Okay, let's barrel on to the bond market, keep this conversation on track. It was a day that we had. It was still quiet, but a little bit more activity, especially if you look at the short end once again. You had yields fall about 9 basis points, a rally in the front end there. The 2-year Treasury yield approaching 4%. once again. So again, even though we're past peak volatility, it feels like people are sticking to their maybe dovish Fed pivot sort of bets there. You can see that rally extended out the curve as well. 10-year Treasury yields down by about 7 basis points. The long end, too, the 30-year yield down about 8 basis points. So I don't know. It's the end of the trading day. It's the end of the trading quarter. And maybe it feels like if you look at financial markets, guys, we're back to a calmer place, Scarlet.
Or we'll start next quarter on Monday with a brand new clean slate, and it feels like there's a lot of things to be worried about. We were just speaking with Tom Galvin of Citi Rockdale, and he was making the point that the pandemic pulled forward tech spending, and once the tech companies start reporting their results and giving their outlooks, you're going to start to see a lot of that show up, and perhaps people realize that the stock prices got ahead of themselves.
And guys, we did get that update yesterday, right, when it came to the balance sheet data with the Fed, but I believe we're supposed to get another one after the bell, right, as far as what the deposit data looks like. So that's something I'm going to be focusing on, especially just the scrutiny a lot of that loan data has gone under, obviously, the last few weeks because of the bank stresses. Okay,
more losers. Let's go to New Jersey. Not that New Jersey's a loser. Bed Bath & Beyond, where they are based, down today 28%. The company's likely going to go bankrupt if its last gasp $300 million equity offering fails. Even the day traders seem to have given up on this one, guys.
It is interesting. I mean, you are seeing, as we talk about, just an incredible size and scopes when it comes to the quarter, particularly for tech, that you do still have this shakeout, that you're seeing some of the shakier, weaker credits really get squeezed here. I mean, Bed Bath & Beyond is a great example.
Yeah, any company that needs cash right now, that's facing a cash crunch, people are not willing to be patient with them at all, right? And Nikola was also another company that's in a similar boat because it had a stock issuance of $100 million, and that got pushed out. And Katie, you were talking about the chart earlier about profitless technology companies, how they've really lagged behind overall technology.
And another big thing, we've obviously been talking so much about the 2-year this year, right? I mean, especially even last year as well. But a couple other indicators that have been close on the radar for my sources, they've been looking at what happens with oil as well as the dollar as far as what that could mean for equities in the second quarter. So if, say, oil, for whatever reason, we see it at $50 a barrel, or if you see the dollar with parity with the euro, those are things that could really gyrate the U.S. equity market. So those are a couple other things in addition to the 2-year that a lot of my sources are keeping their eyes on.
I mean, the energy trade has just been fascinating. Right. We've been reflecting on the fact that energy really did not have a great quarter, but if you think back to the past 2 calendar years, energy has been the reliable outperformer, but no more. You have, I mean, with the price of oil at what, $75 a barrel, obviously that's not quite close to the highs where we were last year that we were talking about.
Yeah, all the optimism has been priced in already. Looking ahead to next week, Jess, you had mentioned earlier that we have the jobs report. That's going to be front and center. But all the Fed speak that's been coming out, I'm not sure that there hasn't been a consistent message. It's no different from what we've been getting all along, which is that we still have more work to do, and we're not ready to let up on the brakes.
Right, more work to do. And when you're talking about the jobs report, we'll also have the average hourly earnings that'll be really scrutinized in that data as well as for what it means. But I know we're not going to get to the big earnings, obviously, like we talked about with JP Morgan in the middle next month, but we will get Constellation Brands next week. It's actually next Thursday, so that's the maker of Corona and Modelo and all of that. But that's a company I'm going to be watching next week.
All right, guys, a lot to look forward to. But that does it for now for our cross-platform coverage of the market close on Bloomberg Television, Radio, YouTube, and Originals. We'll be back Monday, same time, same place.